Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Adam Hughes, CEO of Amount, to discuss the future of buy now, pay later and its impact on banking and the fintech landscape. Adam, it's great to meet with you. Welcome to Trade Talks.
Jill, great to be here. Thanks for having me.
The rise of buy now, pay later took the fintech world by storm in 2021. What drove that trend, and what do you think we can expect in the year ahead?
I think what drove it, obviously, is consumers really like the product. It's a circle of life. When consumers really like the product, therefore merchants and retailers want to offer it, and they need product owners like fintechs and like banks to offer that product to them to enable that for the consumer. When you see the growth of that asset class from year over year, you had $100 billion of purchases via buy now, pay later in 2021. That's up from $24 billion the year before and $20 billion 2 years prior. And so when you see that kind of growth, that's just going to really unlock merchant and retailer interest when they see those additional conversion rates and those additional cart sizes increases, that they're going to have that demand for that product.
And some banks have already taken steps to seize the opportunity. Amount, for example, struck partnerships with several banks and financial institutions. What advantage can banks have over the current fintechs offering buy now, pay later?
Yeah, it's a massively growing asset class, but I do think we're in the early innings here. What banks can offer is obviously they have massive cost of capital advantages, they have massive balance sheet advantages, and they have that brand equity of the consumers. Yes, there's been a huge rise in fintechs, but banks still are banks. They have millions of customers. They are the customers of our parents. And so they have a lot of trust factor that consumers really value across the different age spectrum. And so bringing all that to the table, in addition to that, massive experience around things like compliance and affordability and risk management and all things that are becoming more and more high profile these days. So all that together, our view is that banks can be huge players in this space given the right technology.
And regulators like the CFPB in the US have begun to start looking at buy now, pay later. What should providers be keeping in mind as they work on maintaining and launching new offerings? And should there be a consensus in the industry about best practices?
We think there should be, and that's likely going to happen. And again, when you see a massive increase like you've seen in buy now, pay later the last couple of years, there's going to be more regulatory scrutiny. And so the CFPB has now come in and taking a hard look at things like disclosures for consumers, affordability checks, and just in terms of credit bureau checks as well. And that's natural. And I think that's a good thing. That makes sure that there's good actors in the space providing the right products to customers. And by the way, we think that banks, because of that, are going to be really well positioned to compete there too. Again, I already mentioned that banks have a tremendous amount of experience dealing with regulators. They have a ton of experience around things, again, like compliance and affordability checks, all things that the CFPB seems to really be interested in. And so this will happen. I think it's a good thing to make sure that the right actors are playing in this space, providing the right products to consumers. And because of that, we think that banks, again, have a tremendous amount of experience to really be a big part of the space.
And beyond buy now, pay later, what other fintech trends do you see emerging in a similar way for 2022?
We think in general, just that there's going to be more consolidation and partnerships in this space. Several years ago, more banks had a predisposition to build technologies themselves. Some may still do that, but there's going to be a significant increase, we think, this year. It already started last year, but partnerships with fintechs like Amount to really accelerate technology as well as enable really flexible technology. We talked about the CFPB. What's really important is to have flexible technology as new regulations come out, that you can actually pivot your platforms to make sure that you are compliant. And so whether it's an acquisition or a partnership, we think that will become a really leading strategy for banks in order to be really competitive in this space.
And Adam, to wrap up here in the last minute, let's talk about Amount more specifically. Where do you fit in the fintech ecosystem?
Yeah, we are a key infrastructure player for banks and other financial institutions to really be competitive, whether it's a retail lending product now that branches are continue to be under pressure with COVID. There's a huge push to make sure that branch experience is heavily digitized. We obviously already talked about buy now, pay later. We think there's massive opportunities in small business lending. Amount is a platform that can really accelerate those various digital strategies for a bank CEO. And so as they look to be really competitive and compete against the other fintechs, as well as just meet the consumer expectations around digital in the market that is today, a partnership with an amount can really get a bank there quickly in a matter of months versus potentially years if a bank decided to do it themselves.
All right, Adam, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Of course. Thanks for having me.